Hey everyone, welcome back to Orange US Stock Research, where we break down US stocks with real numbers, clear thinking, and no hype. Today, we're diving deep into one of the most powerful companies in the world, Meta Platforms, ticker symbol Meta on the Nasdaq. Meta is the company behind Facebook, Instagram, WhatsApp, and an AI-powered advertising machine that just crossed $200 billion in annual revenue. In today's video, we'll cover the business model, financials, competitive moat, risks, and give Meta a comprehensive score out of 100 with a clear investment view. Let's get into it. Meta Platforms was founded by Mark Zuckerberg in 2004 as Facebook. Today, it operates two distinct business segments. Segment 1, Family of Apps, the revenue engine. This includes Facebook, Instagram, Messenger, WhatsApp, and Threads. These platforms collectively serve 3.58 billion daily active people, nearly half the world's population as of December 2025. Segment 2, Reality Labs, Meta's Moonshot division. It covers virtual reality hardware like the Meta Quest headsets, augmented reality glasses like Ray-Ban Meta smart glasses, and the long-term metaverse vision. Reality Labs is currently a loss-making investment in the future. Now let's put Meta's market position in perspective. As of early March 2026, Meta's market capitalization stands at approximately $1.6 trillion, making it one of the 5 largest companies in the United States by market value. The stock trades at around $640 per share. Meta's advertising business operates as a duopoly alongside Google, together capturing the vast majority of global digital ad spend. That's a structural advantage that's very difficult to disrupt. With 3.58 billion daily active users growing at 7% year over year, Meta's network is not just massive, it's still actively expanding. Now let's get into the numbers, because this is where Meta's story really shines. Based on official disclosed data, here are Meta's full year 2025 results. Revenue, $200.97 billion, a 22% increase year over year. This marks the first time Meta's annual revenue has crossed the $200 billion milestone. Operating income, $83.28 billion, representing an operating margin of 41%. This is world-class profitability for a company of this scale. Net income, $60.46 billion. Diluted earnings per share came in at $23.49 for the full year. Let's look at the quarterly momentum. In Q4 2025, Meta delivered revenue of $59.89 billion, up 24% year over year, with an operating income of $24.75 billion and a 41% operating margin. The advertising business is the primary growth driver. In full year 2025, advertising revenue reached $196.18 billion, up 22% year over year. Two key metrics explain this growth: ad impressions across the family of apps increased by 12% year over year, and the average price per ad increased by 9% year over year. When both volume and pricing grow simultaneously, that's the AI advertising flywheel in action. Looking at the multi-year revenue growth trajectory, in 2022, Meta generated around $116.6 billion in revenue, a slight decline due to Apple's iOS privacy changes. Then in 2023, revenue recovered to $134.9 billion, up 16%. In 2024, revenue accelerated to $164.5 billion, up 22%. And in 2025, Meta crossed the historic $200 billion threshold, up another 22%. After the difficult year of 2022, the company executed a dramatic turnaround. Revenue has now grown at 22% annually for 2 consecutive years, which is remarkable for a company of this size. The advertising flywheel is clearly working. A great business isn't just about revenue growth, it also needs healthy cash generation. Let's examine Meta's cash flow. Cash position: as of December 31, 2025, Meta held $81.59 billion in cash, cash equivalents, and marketable securities. That's an enormous liquidity cushion. For full year 2025, Meta generated $43.59 billion in free cash flow after spending $72.22 billion in capital expenditures, the highest in company history.
Operating cash flow for the full year was $115.80 billion, up from $91.33 billion in 2024.
The fact that Meta can generate $43 billion in free cash flow even while spending $72 billion on capex speaks to the incredible power of the advertising business.
Let's look at the balance sheet snapshot as of December 31, 2025. Total assets stood at $366 billion. Long-term debt was $58.7 billion, up from $28.8 billion at end of 2024, reflecting new debt issuance to fund AI infrastructure. Given $115 billion in annual operating cash flow, this debt level is very manageable. Total stockholders' equity was $217.2 billion. On capital returns, in 2025, Meta returned over $31 billion to shareholders, $26.26 billion in share buybacks and $5.32 billion in dividends. Meta is simultaneously investing aggressively in the future while rewarding shareholders today. Now let's talk about what makes Meta truly special, its competitive moat.
Meta has one of the deepest moats in the technology sector, built on 5 reinforcing advantages.
Moat 1, Network Effects. With 3.58 billion daily active people, Meta has achieved a scale that is essentially impossible to replicate from scratch. Moat 2, Advertising Technology. 2 decades of proprietary ad tech and targeting algorithms deliver exceptional ROI for advertisers. Moat 3, Multi-Platform Ecosystem. If users shift from Facebook to Instagram, Meta still captures that engagement. Moat 4, AI Recommendation Engine. Meta's AI drives content discovery on Reels and Feed, increasing engagement and ad revenue. Moat 5, Switching Costs. Social graphs, photos, and business connections create powerful lock-in for billions of users. Let's zoom in on the user scale data because it tells a powerful story. Meta's daily active people grew from 3.19 billion in December 2023 to 3.35 billion in December 2024, to 3.58 billion in December 2025. That's growth accelerating from 5% to 7% year over year, defying the narrative that Meta's platforms are maturing. And when you compare Meta to competitors, YouTube has 2.5 billion monthly active users, TikTok has 1.7 billion monthly, X/Twitter has 600 million monthly, and Snapchat has 450 million daily. Meta's 3.58 billion daily active people dwarfs all of them. This is the network effect in action, and it's a structural asset that no competitor can replicate. Meta is not just a mature cash cow, it has multiple significant growth vectors ahead. Growth Driver 1, AI-powered advertising. Meta's AI tools, like Advantage Plus shopping campaigns, allow advertisers to automate and optimize ad spend with unprecedented efficiency. This drives both higher ad prices and higher advertiser ROI. Q1 2026 revenue guidance of $53.5 to $56.5 billion came in well ahead of analyst expectations. Growth Driver 2, Meta AI and Llama. Meta's open-source Llama large language model has created a massive developer ecosystem. Meta AI, integrated across all apps, had over 700 million monthly active users as of late 2025, making it one of the most widely used AI assistants in the world. Growth Driver 3, WhatsApp monetization. WhatsApp has over 2 billion users globally but remains significantly under-monetized compared to Facebook and Instagram. Meta is actively developing WhatsApp business tools and AI-powered messaging, a massive untapped revenue opportunity, particularly in emerging markets. Growth Driver 4, Ray-Ban Meta Smart Glasses. The Ray-Ban Meta Smart Glasses have been a genuine commercial success, proving that AI-integrated wearables have real mass-market appeal. Meta's 2026 capex guidance of $115 to $135 billion, up dramatically from $72 billion in 2025, signals the company's conviction in AI and next-generation computing. This is a massive bet on the future. No investment analysis is complete without an honest look at the risks. Meta faces several significant challenges. Risk 1, Regulatory headwinds. The FTC's antitrust lawsuit challenging Meta's acquisitions of Instagram and WhatsApp remains an active legal threat. In Europe, the Digital Markets Act is forcing changes to how Meta shares data across its apps. Risk 2, Reality Labs losses.
Reality Labs recorded $19.19 billion in operating losses in 2025 alone, and over $60 billion in cumulative losses. There is genuine uncertainty about whether the metaverse vision will achieve commercial scale.
Risk 3, massive capex commitment.
If AI monetization doesn't accelerate as expected, $115 to $135 billion in annual capex could weigh heavily on free cash flow.
Risk 4, competition.
TikTok remains a formidable competitor for user attention, particularly among younger demographics.
Risk 5, advertising concentration. Meta generates over 97% of its revenue from advertising. This concentration creates vulnerability to macroeconomic downturns or any disruption to digital advertising. Risk 6, AI regulation.
As AI becomes more central to Meta's business, new AI-specific regulations, particularly in the EU, could constrain how Meta uses AI in its advertising systems. These risks are real and investors should monitor them closely. But in our view, Meta's financial strength, with $81 billion in cash and $115 billion in annual operating cash flow, gives it the resources to navigate these challenges from a position of strength.
Alright, let's put it all together with our comprehensive scoring.
We score Meta across 5 dimensions, each out of 20 points.
Moat and market position, 19 out of 20.
Network effects at 3.58 billion daily users and proprietary ad technology give Meta one of the deepest moats in tech.
Financial health and profitability, 18 out of 20. $201 billion in revenue, 41% operating margins, $43 billion in free cash flow. Slight deduction for Reality Labs drag and increased debt.
Growth potential in AI and AR, 18 out of 20. AI advertising, WhatsApp monetization, Meta AI, and AR glasses provide a compelling long-term growth story.
Management and execution, 18 out of 20. Meta's transformation from 2022 to 2025 is one of the most impressive corporate turnarounds in recent history.
Valuation and risk, 15 out of 20.
Regulatory risk is real, and advertising concentration is a structural vulnerability. Meta's overall score, 88 out of 100. So what's our investment view on Meta?
Our view, bullish.
We are positive on Meta at current levels. Here's our reasoning.
Meta has demonstrated exceptional execution, transforming from a struggling business in 2022 into a $200 billion revenue machine by 2025.
The AI advertising flywheel is accelerating.
The user base of 3.58 billion daily active people is a structural asset no competitor can replicate.
WhatsApp monetization is still in early innings. Meta AI with 700 million monthly users is becoming a genuine AI platform.
On valuation, at approximately $640 per share and a forward PE of around 22 times, Meta is trading at a reasonable multiple given its growth profile. For a company growing revenue at 22% annually with 41% operating margins, a 22 times forward earnings multiple is not demanding. Bottom line, Meta is a high-quality business with durable competitive advantages, exceptional financial performance, and multiple growth drivers.
At current valuations, we view the risk-reward as favorable for long-term investors. That wraps up our deep dive on Meta platforms. Here's a quick summary. Business, world's largest social media ecosystem, 3.58 billion daily active people.
Financials, $201 billion in revenue, 41% operating margins, $43.6 billion in free cash flow for 2025.
Moat, deep network effects, proprietary ad tech, multi-platform resilience. Growth, AI advertising, WhatsApp monetization, Meta AI, AR glasses. Risks, regulation, Reality Labs losses, massive capex. Score, 88 out of 100.
View, bullish. If you found this analysis helpful, please give this video a thumbs up and subscribe to Orange US Stock Research for more in-depth US stock analysis.
Drop your questions in the comments below, I'd love to hear what you think. See you in the next one. This video represents personal opinions and analysis only, intended for informational and educational purposes. It does not constitute any investment advice, recommendation, or offer.